What's the credit story for the banks at the moment in Europe?
Improving, as it has been for the last 10 years. Credit Suisse, I think, is quite an interesting investment at the moment. It feels about a year and a half behind UBS in the improvements that are getting made, but they're coming through, and you're seeing Mr. Tiam actually deliver on them as well. So I think for us, that's probably a more attractive place to be. And banks as a whole, from a credit perspective, all this regulation just tends to improve the balance sheet. They've got a lot to get through over the next 5 to 10 years with the regulatory change, but generally it's okay. I think the relationship people have got with their banks in Europe is changing dramatically, and that's possibly the ECB's action recently as well, and that will change the makeup of European growth. But for credit investors, it's a pretty stable environment for us.
Well, the story over in the U.S. is that as you wind up seeing the Fed raising rates, you're going to have to see spreads widen in the corporate market. Is that the same story, Luke, when it comes to Europe, especially when it comes to banks, or is it a different narrative?
Certainly it's going to come at some point. So, you know, with a minus 0.4% rate on cash at the moment, investors are happy to take zero coupon bonds from any company as long as they're investment grade. Clearly, as the environment changes and rates go up, which could take a long time, that will change, but it's that long time. Optically, spreads for European credit look really expensive, but where else do these investors put their money?
They're incredibly tight. I mean, high yield spreads this morning, I think we got back to decade tights when you're looking at the situation for European high yield. Luke, going forward, help me understand how much rate risk is in European credit at the moment because of what the ECB has been doing.
Depends how you want to look at it. If you look at the stack of yield, more of that is still coming from credit risk than it is from rates risk. But, you know, the sensitivity to movement in rates risk is rising all the time. But I think it would take a rise to maybe 1.5% for 10-year yields before people stop piling into European credit. And, you know, the AT&T deal that you were talking about in dollars today, massive, but we've had lots of these mega deals in European credit this year, and they've been taken down again and again and again.